I want to show you one of my favorite smart money concept entry strategy. It is very easy and simple. Anyone can do it. Let me start by showing you everything about this strategy. It is based on smart money concept. For those of you who don't know what smart money concept is, I have it covered. All you have to do is to simply head over to my YouTube channel. The link is on my bio. This is my YouTube channel. Come to playlist and then simply come to smart money concept complete course. I have a lot of videos, 23 different videos that will get you started with the smart money concept. So let's jump into this particular strategy properly. So this strategy is based on change of character. Now don't worry, I will show you what change of character is. If you have been trading in the financial market, whether you're trading crypto or forex or stocks market, I can assure you that with this simple strategy you can double your account in just 1 month with patient and good risk management. So let's start by defining what are the key things you need to pay attention to. The first thing is that you need to find a time frame. Any time frame of your choice. If you're using the daily time frame as your reference time frame, or you're using the 4-hour time frame, or you're using the 1-hour time frame, depending on what time frame you choose to. And then the second thing is to have a basic understanding of price delivery. What that means is that when you have an uptrend is basically a formation of higher highs and higher lows. I'm going to be drawing. This is what we call an uptrend. Whenever you see this kind of movement of price, we call it an uptrend. Why is it an uptrend? It is basically because we can see higher highs forming in this kind of movement. The more you see this sign, you know that this is a trend continuation, and this is a higher low, higher low, higher low. You can have the same thing in a downtrend, that is lower highs and lower lows. So what we look up to, we just pay attention to such kind of a movement. So this last higher low that was created, is now our area of reference. Anytime we see price decides to push down and fail to get rejected at this area, price just traded through this level, we can say that this area is not as strong as we thought, which means we have a change of character, which simply means change of direction of this market. So from here we can look for an entry using either an order block, a fair value gap, mitigation block, or any of the 7 institutional reference points. So from here, this is a change of character. Once we close below this level, we have taken this last guard. This is just like the last guard we are looking for. So if we see price coming like this is now a change of character from an uptrend to a downtrend. So this is the system we're going to use. I'll go to my chart and then show you how to use this particular strategy. So the first thing is to find a time frame. This time around I'm using 4-hour time frame. And then I also said you must look for an entry time frame. You can see it, and then you do your risk management properly. So let's get to that. Go and try this strategy, and then I assure you you're going to see a result you've never imagined. So this is it. We have a movement from here. Can you see? Just this area, just this level. We have higher high, higher low, higher high, higher low, higher high, higher low. So look at this. The last higher low that was created was here, this level. This was the last higher low that was created. After that, look at what happened. We actually pushed below this level. Look at this. If you put your horizontal line, after pushing up, we crashed down below this level. So this last reference level, from here we can say to have a change of character. Once you see this, just get ready to look for an institutional reference point. That can be an order block, a fair value gap, a mitigation block, a breaker block, or just your liquidity void. Now we can see almost all of them right here. Let me show you all of them. This is a bearish order block, the first one. This is a bearish order block, and then this candle is a breaker block. I've thought about breaker block. It's on my YouTube channel. Check that particular video. It's a very powerful institutional reference point. This is a breaker block. This particular candle, let me mark it out for you so you can see. This particular candle is a breaker block. So this one is a breaker block. So price can react from there, or price can even reach your order block, or it can just react within this fair value gap. Let me show you the fair value gap. This one, the difference between this candlestick and then this candlestick. The high of this candlestick and the low of this particular candlestick is your fair value gap. Now we don't just enter blindly. That is the reason why we need the entry time frame. The entry time frame is going to be 1 hour time frame, a time frame lower than the time frame you've seen this thing from. Okay, I'm using 4 hour, then I'll go to the 1 hour time frame. So let me just go to the 1 hour time frame and then find an entry. If I see a failure from this small retracement, remember, if we are going to a downtrend from this area after taking this level, we're going to have a retracement, and the retracement is going to be like a mini uptrend, and that is what the 1 hour and the lower time frame traders are seeing. So let's go to the 1 hour time frame and see that particular level. Now coming to the 1 hour time frame, this is what you're going to see. Now the reason why you need that 1 hour time frame is to actually minimize your risks. Now in the 1 hour time frame, you're actually going to see that things are happening differently in this kind of situation. So there are many ways you can take your trade. Just like I told you, you can look for something like this. Can you see this fair value gap at this point? This fair value gap, and then you can see it clearly. So this, you can take trades from here if you can endure the processes. So this is where you can enter trade, and your stop loss is just right above this level. Your take profit should be first the recent low that was created, and then if price give you opportunity, you can take. But look at what happened. Price never really went to the direction it had to rally around. So that is why if you're taking this kind of trade, you have to be patient. Since this is an uptrend, higher low, there is no any higher low at this point. There is no higher low until this level. So we have broken structure from this level. So we have aligned with the downtrend that is after the change of character. So we can patiently wait for price to either give us a sign. In this regard, we did not clearly see a sign. So if you enter trade from this level, from this area, okay, this level, if you can endure this chop, and then at the end of the day, it actually worked. The trade actually worked, and then it touched your take profit. But you can find a better entry after you've visibly seen that this has aligned to this. After it has broken structure, it can also come back. Look at how it came back. It came back to this particular order block. Notice how the bodies of the candle actually respected that level. So if your entry is here, your stop loss is definitely above this level. Okay, so this is another way you can enter. Either you can enter at this level, or you can patiently wait for it, and then you enter at this particular order block, and your stop loss is just above it. Don't be too stingy with your stop loss. It can come to this level, and then it went your way. So this is the first way you can use this particular strategy and trade. So let's go back to our 4 hour time frame and check for more again. Now this is the level. Look at this. We just finished taking our take profit. Price came back because this mini movement is a downtrend. You can see we had a downtrend, and then price came back, and we have an uptrend here. We took out the last level here, so we are now in an uptrend. So we look for another change of character, and then we can take trade. Look at this, the last low that was created. We are expecting to see that we have taken this last low. If we take our line, we have not taken out this last low, so we are still in an uptrend. We patiently follow price to where it is about to lead us to. So we have another one here, then we have another one here, this tail. This is where we have a change of character again, because the bodies of the candle have actually traded through it. So this is a change of character. Now what do? We go to a lower time frame and find an entry. Even from here, you can see an entry, which is this fair value gap. This fair value gap, you can enter from here, but you can find a better one in the 1 hour time frame, which is what we're going to do right now. Coming to the 1 hour time frame, we're going to look for that particular area. Let's see which area is that particular area I just showed you. Let me see if I can find it. I think it's somewhere around here. So this is it. Look at it. Look at the area. after the change of character, price actually came back and respected the same thing anyway, both in the 1 hour time frame and in that time frame. We have this fair value gap. Is a perfect trade entry, a fair value gap with a old low. This is an institutional order flow entry drill, so this is another entry. Very simple and easy, very simple and easy. Now when you are entering trade in this, you have to be very patient with that. Once trade gives you that opportunity, you can take it. Looking from the 4 hour time frame, look at what happened. Price has actually came to the middle, halfway. If you take your Fibonacci tool, let me show you what that means. If you take your Fibonacci tool from here and measure this fair value gap, half of this fair value gap is called consequent encroachment. So at that kind of level, once you see that the 50% level is coming to that area, you can take your trade. That's half of this fair value gap is called consequent encroachment. So at that area, you can take your trade, and then you will have a smooth ride. So this strategy, I assure you, once you try it, you're going to see a change in your trading journey. So look at this. We have a change of character here. I call it change of character strategy, guys. Change of character. Do we have an entry? We did not have an entry, so price ran away from that. We don't want to chase price, so we just carefully look at that happen. And look at this. Last low that was created was here, and we actually took it out. This is a change of character. Did we see an entry? Yes, an entry is here. Look at it. Fair value gap. Let me show you fair value gap at this area. So this is an entry, even though it just came to this low and then push, went for liquidity. All this area is liquidity. So this is actually going for liquidity, buy side liquidity. So if you check your chart, you're going to see this time and time again. Guys, this is one of my most secret strategy. I use it all the time for trade entry. Look at this. I can take this as my low, this area, change of character after this short-term high. Okay, it came. Look at this. This is the order block. It actually came and tested the order block. You can find this entry in the lower time frame and move down to that area, and then all of a sudden we have another one right here. Look at this. After that, we have a change of character, guys. At this level, we have a short time, and then boom, we took out this low, this particular low. Or you can use this one if you're not so convinced around this level. You can use this one as your old high. Okay, this is your old high. As price came back to this very huge fair value gap, or this is not a mitigation block, so this is what you look out for. So these are the entries you're going to find using this strategy. You see change of character, retracement back to that level. So guys, go ahead and try that. If you find value in this video, to be specific, you can actually subscribe to my YouTube channel for more videos from me. Thank you for watching. See you next time.